Hello and good morning and good afternoon and good evening to everybody that is tuning in. My name is Leah Heilpan and I will be your host for today. You may know me as the host of my own podcast, The Leah Heilpan Show. I'm an author, I'm a content creator, and I do a lot of different things in the space. So without further ado, I'd like to welcome everybody to the very first session of our Responsible Trading Summer Camp. It's a 3-part webinar series where you will learn everything you need to know to start trading cryptocurrencies with confidence. So our goal is to help you take trading responsibly, to help you take your journey to the next level by offering practical tips, strategies, and advice that you can apply on a day-to-day basis. And today we are going to go through some responsible trading basics so you can learn how to manage your risk, trade responsibly, and build sustainable profit. So sounds pretty good. Now, afterwards, we've got a lot of special futures trading workshops coming with our trading expert and director of Binance Futures, Justin. So if you're interested in trading derivatives or picking up some more advanced strategies, be sure to stay tuned. Finally, for everybody who registered on Eventbrite, definitely check your inbox after this event because we'll be sending you a short quiz to fill out. Get enough answers right and you'll actually get a chance to win some awesome prizes. So there's BNB tokens, BUSD Futures Trading Vouchers, some Binance swag, and some other goodies that we're giving away. So it's all very, very exciting. Okay, so we have a lot planned and we've got just over an hour to cover everything. So I think it's time to jump right in. So you probably know that the cryptocurrency markets can be pretty volatile. With the markets open 24 hours a day, 7 days a week, it can feel a little overwhelming at times. And with sudden price swings and market fluctuations, even experienced traders may need to step back just a little bit. So Binance has an important responsibility to keep users educated, informed, and protected. It was the first cryptocurrency exchange to introduce a responsible trading program as part of its commitment to user protection and the development of a sustainable cryptocurrency industry. And Binance is continuing this initiative with today's Summer Camp webinar. So I want to thank Certic and Clever Finance for supporting Responsible Trading Summer Camp. I'm very excited to kick this off. So let's get started with some responsible trading basics. So please join me in welcoming Daniel from Binance. Over to you, Daniel.
Hi. All right, so let's get started then. I'm going to show you how to trade responsibly like a pro. So I'm going to share my screen here. I'm going to set this up. And now we are screen sharing. Let me know if you can see the entire thing I'm going to present. Are we good here? I'm going to assume yes. All right, so how to trade responsibly like a pro. What is responsible trading? Responsible trading is about exercising control over your trades, taking responsibility over your actions, recognizing bad influences, and ultimately understanding if your trading activity is the right fit for you. On the other hand, trading responsibly also means you understand not everyone can or should be a trader. If you're looking to get started in trading, the golden rule is to never go beyond your means. In other words, never risk money you can't afford to lose. Here at Binance, we've established several different features and guidelines to help users trade responsibly and make educated decisions. So moving on, there's 3 general tips for responsible trading: practice self-discipline, never stop learning, and protect your funds. So practice self-discipline. In trading, self-discipline means telling yourself to avoid unhealthy habits like addictive trading or gambling. Binance encourages users to practice self-discipline, especially when they feel pressure by losses or a losing streak. Our system will send notifications to constantly remind users of the dangers of addictive trading and the risks involved when trading more complicated products like derivatives. Once trading becomes emotional rather than a research decision, it's gambling. So you really need to understand your goals, your investments, and how much risk you can handle. Number 2, never stop learning. Explore the cryptocurrency markets with different resources, including courses, webinars, and videos designed to help you at each stage of your trading journey. Binance believes in educating its users on every part of the crypto trading platform, from the technology to more complicated services like derivatives trading. Our educational content is available for free on Binance Academy, Binance Research, and numerous product guides. Protecting your capital. Risk management is crucial to every trader's success. It helps you avoid big losses and protects your trading capital. On the Binance trading interface, we have established risk management features such as stop-loss orders to help users manage their risk for each trade. Users also have access to advanced risk control features such as price protection, which protects users from potential market manipulation. Other safety features such as liquidation mechanisms and insurance funds protect users from losses that are too big to recover from. So the lessons here is take profit when you can, set stop losses if you can't afford to lose that money, and to invest what you can afford to lose. All right, moving on. Are you a responsible trader? And let's start off with point number 1. Finding it difficult to stop or reduce your trading activities, feeling stressed or irritated when a friend or family member suggests you stop or reduce your trading activities, having negative thoughts when the market moves against your trades, not taking responsibility to understand your own financial situation, not taking the time to read and familiarize yourself with our products and services and terms of use, trading with funds you can't afford to lose. If your survival money is at stake, you are going to make emotional decisions, scale back, risk what you can afford to lose, and understand how much you are willing to risk. So my take on this, not everyone is going to be a master trader. If you're new to trading, don't expect big wins. You might get lucky. If you do well or you do badly, reflect on that. Find out why it was a good trade, why it was a bad trade, and what you can learn for next time. All right, risk management. What is risk management? We are constantly managing risk throughout our lives, whether it is a simple task such as driving a car or an investment in our health like insurance or a medical plan. In short, risk management is all about assessing and reacting to risks. In the world of finance, we typically describe risk management as how a company or investor handles financial risks. How does risk management work? Typically, the risk management process is broken down into 5 steps: setting objectives, identifying risks, risk assessment, defining responses, and monitoring. However, these steps may change significantly depending on the situation. The first step in defining your main goals, which often relates to how much risk you can tolerate and handle. In other words, how much risk are you willing to take towards reaching your goals? Number 2, identifying risks. Identifying risk is the second step, and it involves detecting and defining what the potential risks are. This step aims to reveal all sorts of events that may cause negative effects. Examples: market risk. Reduce this risk by setting stop-loss orders on each trade so that your position will automatically sell before a heavy loss. Liquidity risk. Reduce the risk by trading on markets with high volume. Usually assets with high market cap value tend to be more liquid. So my notes here, while trading low market cap assets, it might be hard to sell without affecting the price too much. If it's a low liquidity market, you're going to have a hard time selling, and that is a high risk investment in itself. So really be aware of what you're investing in and the liquidity associated with it. Credit risk. Reduce this risk by trading on a trustworthy exchange so that borrowers and lenders, or buyers and sellers, don't need to rely on each other. Operational risk. Reduce operational risk by diversifying your portfolio and not going all in on one company or asset. You may also do some research to find companies that are less likely to experience operational malfunctions. So hacks. You don't want to be involved in a data breach or a hack when it comes to a certain cryptocurrency. So you want to invest and spend time researching what the quality projects are and what the safe ones are doing and have been doing for a long period of time. Systemic risk. You can also reduce this risk by diversifying your portfolio, but in this case, diversification should involve projects with unique proposals or companies from different industries, preferably the ones that present a very low correlation. That just means create a diverse portfolio. If you're invested in just NFTs, if you're invested in just gaming, if you're invested in just exchanges, the markets kind of move together, so you're exposed to a lot of risk depending on how that asset will move. Having a big, diverse portfolio protects your capital from one bad investment. So it really helps to diversify and understand what you're investing in. All right, moving on. Number 3, risk assessment. So after identifying the risk, the next step is to evaluate how frequent and severe you expect them to be. The risks are then ranked in order of importance, which will lead to the next step, creating suitable responses for each risk. Number 4, define your responses. The 4th step is to define how you will respond to each type of risk. According to how important they are, this step will also create your action plan in case of an unfavorable event. Number 5, monitoring. The final step of risk management is to monitor how well your strategies do in certain events. This step will require you to regularly collect and analyze data. So if you're trading well or trading badly, find out why. Research it, take the time, and use that knowledge moving forward. And that's how you grow as a responsible trader. And that's it from me. Dan, stopping sharing.
Daniel, that was great. Thank you so much. Some really great tips there to keep in mind. Responsible trading is something every trader can benefit from, whether they're already experienced or they're just new to crypto. It's so important. Now, before we move on to our next workshop, I would like to remind viewers who registered on Eventbrite to check your email inboxes after this event, because we'll be sending out a short quiz after each webinar. The first 10 to 20 people who answer the quiz and qualify will get to take home some special rewards, including BNB tokens, Futures Trading Vouchers, and some Binance swag. So very exciting. There is still time to register on Eventbrite if you don't want to miss out on all these great prizes. The winners from today's quiz will be announced within 24 hours on Binance's Twitter. So go to twitter.com/Binance and give Binance a follow if you haven't already. All right, let's keep this going. Right, so next up, we have a workshop hosted by Justin, the director of Binance Futures. He'll be showing viewers how to trade derivatives responsibly, including some easy-to-use strategies that you can even try at home.
Hey, hello everyone. So thank you, Leah. So it's very happy to be here and discuss about responsible trading with you guys. So first of all, let me share my screen. Okay. So, well, I think Binance is the first major crypto exchange to initiate a responsible trading program. And we do care about our users. And actually, user focus is the #1 culture of the company. So basically, our endeavor of responsible trading falls into 2 categories. One is on the product side, and the other is on the education side. So on the product side, basically, we have several risk control measures. So for example, we have different position limits for different leverage and for different coins as well. So the higher leverage a user is choosing, so the less position limit there will be. And for less liquid coins, there will be less position limit. And we also have a function called cooling off period. Basically, if you trade too much and you feel that you are a little bit irrational, you can use this function to block yourself from trading for some time. And I'll give a demo of this function later. And the other one is anti-addiction notice. So this is on our options trading. So if you've traded too much options, then we'll give you a heads up of that and try to calm users down a little bit. And we've also have several regular product improvements, and there's more features to come. So for example, we've just capped our max leverage to 20x. And on the education side, basically we'll have a quiz for all the leverage products before you can open an account and trade the product. And we've also have videos for all these products as well. And our Binance Academy also helped create several articles about all the derivative products. And basically they cover
Justin, just quickly, I think we're having a little tech issue. Could you just click present on the PowerPoint, I think, so that we can all see it on a bigger scale?
Sure.
Yeah, that would be great. Perfect. Thank you. All right, keep doing it. It's great. Thank you so much.
Sure. And on the Binance Academy, basically they help to create several articles to cover the fundamentals of the derivative products, basically introducing what the product is, pros and cons, and proper way to use the product. We've also have several blogs, support articles, and FAQs, shows you a step-by-step guide of the products. And we also hold educational campaigns from time to time, just like this one. Okay, so for those who may be new to futures, I'll give a brief introduction of what futures is first. So unlike a spot market where when you want to buy a coin, you have to pay the full amount. On futures market, actually, you can use a percentage of margin to trade. So for example, if you are using 20x leverage, you can put down a $5 margin and hold as much as $100 worth notional value position. So basically that futures will offer you leverage. That is one major reason why people will trade futures. And there are several other reasons as well. So for example, you can short, which means you can sell something that you don't really have so that you can make a profit in a bearish market, which you can't on a spot market. And the other reason would be hedging. So let's say if you are a believer of Bitcoin and you want to hold Bitcoin for long term, but you are worried about the price to drop in the short term, then you can use futures market to hedge, which means you open a short position on the futures market so that you can cover the loss of holding Bitcoin and have a profit on the futures side. And those basically are three reasons why people would trade futures. And when you open a futures account with us, as we mentioned, you need to take a quiz. We need to assess your suitability. And you have to understand the risks of futures, the product, and the leverage. And actually, futures trading may not be for everyone. And okay. Now let me do a demo of cooling off period. Can you see my screen? Okay. So this is the trading page of our futures product. So you click this button in the right corner and you choose cooling off period here. So this is a description of the function. Basically, it says if you turn on this function, it will block you from strategy trading, battle, options, and the futures. So if you turn this on, you can choose a time frame, whether it's 1 day, 1 week, or 1 month. And if you click confirm here, it will block you from trading all the products just mentioned. And please note that if you turn this on, it cannot be turned off manually. You have
Justin, hang on, we're having another tech issue. We can't see your screen anymore. It's gone. Reshare it for me, please.
Sure. Let me see what I can do.
No worries, it happens. It's the beauty of live shows.
Sorry about that. I think I need to choose another tab.
Give it a go.
Can you see it now?
Yep, that's perfect. Thank you.
Okay, cool. So this is our trading page of futures. So if you click the button here, and choose the cooling off period, then this is what the window is like. So basically here it introduces what this function is. So if you turn this on, it will block you from trading futures, strategy trading, battle, and options. And you can choose a time frame here. It's whether 1 day, 1 week, or 1 month. And if you click confirm here, it will block you from trading. And please know that if you turn this on, it cannot be turned off manually. You have to wait till it ends before you could make any trades. And you have to close all the positions and cancel all the open orders before you can turn this function on. Okay, and I think I need to share another page. Wait a moment. Okay, so the second one is anti-addiction notice. So well, I can now show you a demo here because I have to make several trades before I can trigger it. But I can show you what it looks like. It just looks like the picture here. Basically, it says you are temporarily suspended from trading of Binance options for because continuous lost trades in the past 24 hours. So for the cooling off period is kind of like a self-displaying, but for anti-addiction notice, it's more like a compulsive one. And the next one is stop loss. And let's go back to the trading page. So you can choose the stop limit order here. And well, this is a function that is recommended for risk management. So first of all, you can set a stop price here. Let's say if I have a long position of 1 BTC, right? I'm afraid that the price would go down, so the market goes against me. So let's say we set a stop price of 45K here, which means if the price fall to 45K, then this order will be triggered. And then I can put another limit price here. Because if it's a long position and you want to sell, so it's better if you put this price a little bit lower than the stop price. So since you are selling, if you put the price higher than the stop price, chances are you cannot get filled, and this stop order cannot protect you. And if my size is 1 BTC, then I just put 1 here. And if you click sell here, then you just place the stop order. Okay, lastly, I want to discuss a little bit more about leverage and the insurance fund. So, well, leverage will allow you to use your capital more efficiently, but keep in mind, while you amplifying your profits, you are also amplifying your risks. So make sure you understand all the risks and do not take more risks than you can bear. And for insurance fund, actually, it's a safety net in case of counterparty liquidation. So as a futures trader, you cannot lose more than you have in your futures account. So if there is a negative balance, the insurance fund will come in and cover all the negative balance. And for counterparty of this bankruptcy trader, the insurance fund will also guarantee that he can get the profits he earned. So insurance funds is only used in this way, and it is not used for other hypothetical scenarios. Okay, that's all I have. I think Leah, you have some questions from our community.
I do. Thank you so much for that, Justin. It's really interesting, you know, to learn more about these things. I think it's a really important topic, so it's great to go through these things. So yeah, we have about a 5 to 7 minute Q&A now. So guys, feel free to drop your questions in the chat or the comments below, and we'll definitely ask them. But just to kick this off, Justin, what's the best advice for a beginner futures trader? Sorry.
Okay, cool. Good question. I think the best advice I could give is to have a good expectation, because no matter what a skill you want to pick up, it also take time, right? You don't expect yourself to become an expert like in just one day or 1 week. So be patient and keep learning and do responsible trading. And as we mentioned, use a stop loss to cap your learning cost. And I think that's the most important thing for beginners.
Yeah, I think people often get carried away and, they sort of think they're going to make these incredible gains straight away, but it's a learning process. Absolutely. So we've been reading about some concerns with some stable coins that may not be fully backed. So will you list USDC pairs on your spot and futures markets?
Actually, we don't have USDC pairs, but we do have BUSD pairs. And BUSD is a trust stablecoin because it's a stablecoin Binance cooperate with PEX. So for every BUSD, we have a $1 US dollars deposited in PEX trust. So we also have another function called join margin. So which means that you can also use a BUSD. If you turn this function on, you can use a BUSD as collateral to trade other pairs, USDT pairs that for some coins that is not listed as BUSD pairs.
Okay, I understand. So I'm going to keep moving forward. Guys, please don't forget, you're welcome to drop your questions in the chat below and we'll ask Justin. I want to talk about margin trading. So how much margin does 2x or 3x leverage perp futures give me? And I'd also like to know the percentage. So if 10x gives me, let's say 5%, how much does 2x and 3x give me?
Okay, good question. This is exactly the things we want users to make it clear before they start trading. So for leverage, if it's a 2x, which means you need to put 50% collateral as initial margin. So you just use 1 divided by the leverage that gave you the initial margin ratio. So for example, if it's a 3x, then the initial margin ratio is a 1/3, which is roughly 33%. And for maintenance margin, which is the margin you have to have to hold for holding the positions. So it's always a half of initial margin on Binance. So if you are using a 2x leverage and your initial margin is 50%, then the maintenance margin level is 25%.
I'm following. Okay, so our last question for the minute is, why is it not possible on Binance to open a long and short position at the same time? Isn't there any way to trade on the futures market in both ways simultaneously?
Actually, yes, we do have this function. So by default, users can only hold positions on one side, but we call it one-way mode, but we have another mode called hedge mode. If you change to this mode, then you can hold positions on both ways. Well, no matter which mode that you choose, it won't affect your profit and loss. But we understand that some different users have different habits. Some users just want to see their positions on both sides. So you can use the hedge mode for that.
All right, well, I think that concludes the end of our Q&A session. So thank you so much, Justin. I would now like to invite F.A. Bulduk, economist and crypto quant, to share his trading experience and conduct a small trading workshop.
Yeah, thanks for having me, Leah. It was a great presentation from Daniel and Justin. That's also good to be part of that. So let me firstly share my screen. Let me know if there's any technical issues about that. Can you see well? I guess yes. All right, so let's kick off. Firstly, let me talk about who I am and what I'm doing, and then we can actually dive into the topic. So here is the agenda of today. It will be pretty much like 30 to 40 minutes presentation from me. First, I'm going to talk about who I am and what I'm doing and how I met with this Binance Society and cryptocurrency trading platforms. And then I will briefly talk about generic rules of responsible trading, but I'm not going to spend too much time as Daniel and Justin already covered this. And I am planning to give you a tailor-made presentation regarding the responsible trading and how I'm actually trading in my real life. So my name is Efe. I'm an economist and verified crypto quant with plus 10 years experiences. Actually, I wasn't using Twitter and other social media accounts at all until like 3 months ago. I was the trader guy who is trading in the shadows, and some of my friends, they just insist me to start making some sharings on Twitter. And then let's say that I ride the wave, and right now I have around 150,000 followers. And thanks to the huge Turkish community, they elected me as the Europe's influencer of the year in the Binance competition. So I like to share my social media channels so people can follow me if they are interested with the analysis and the things that I'm producing. So in Twitter, you can find me as the Bulldog. So this is my nickname. And I also have an English account that I don't use so frequently, but starting from today, I think I have to use it. And also I have a YouTube account that people can also see what I'm doing in terms of technical fundamental analysis and on-chain analysis. So let's come to the generic rules. Let me take myself out so you can focus more content rather than my tired trader face. All right. So this is 10 generic rules that I got from a website for you. So these are basically covering what already Justin and Daniel told us. If you like to read this, so you can stop your video and read about that, but I like to share with you more a tailor-made version of that as I experienced throughout my journey in 10 years. So it's frozen. Let's see. Yeah, now it is working. As many people is saying, knowing yourself and managing your psychology is the key to success. Why? Why is that? Because many people actually are coming to crypto environment and space with no experience at all. In the traditional markets, stock markets and Forex, it's not the case. Most of the time you have to go to a brokerage or you can go get some secondary financial services, but it's not the case in cryptocurrencies. And people are coming here and because they like to make money. There is high volatility and they don't actually know how actually trading feels like. And when they see the potential loss, they are scaring and they're losing a bunch of stuff. Especially in the Turkish society, it is a really widespread issue because Turkey has one of the highest crypto orientation rate, despite they have one of the lowest, I guess, win rate among all. So when you're trading, especially volatile assets like cryptocurrencies, you have to, first of all, listen to yourself. I have some friends, they are joining the competition, trading competition of exchanges, and they are actually really good, always being in top 10. So these guys, just to let you know, these guys are noting every single position and how they feel to Excel sheets. So when they come back, they are seeing why they fail. So they collect data about themselves and how they feel. That is really important to manage your psychology, because sometimes you may be right with your technical analysis and the other side of analysis, but you may be not ready to trade, actually. That's why I think cooling features is especially really cool from Binance, and I really appreciate Binance efforts to conduct this kind of trainings. This shows me that they really care about their users. Actually, I will also show about some of the features that already Justin mentioned, but I will just skip them really briefly. So let's go to the other section. What I already told you that, let me come back a couple steps. So we already talked about knowing yourself. So it's really important for self-awareness. And then you have to discipline yourself, and you have to actually understand the trading styles so you can find which trading style is best fit for you. And now I'm going to talk about the trading styles so you can have a brief understanding of different trading styles and different trading strategies. And then we're going to talk about most of the time, what I see is the common problem is that the people who are investing or trading, they don't have a trading plan and they don't have the rule. They don't have any rules, so they just dive into market, starting following some of the influences, and they're just trading. This is not the right way to do it. So I'm gonna explain you how to do it, as I am managing quite big portfolio in crypto space. I never ever act against my rules. That is really important. And then we're gonna talk about some competency related issues, and I will show you what kind of data a professional trader is using, and then I will briefly talk about couple experiences that can light your road. So let's come to here. For you, I divided to the types of traders and trading styles to 6. Sorry for that. So first, we will talk about whether you are an active or passive trader. Then we're going to talk about systematic and discretionary trading, then concentrated, diversified. We will talk about stocks, commodity, forex, or cryptocurrency you are trading. This is also another step of classifying yourself. And then I will briefly talk about technical, fundamental, macro, and quantitative data, what kind of data you have to use or you are using already, so you can see yourself and benchmark yourself. And then we're going to lastly talk about the frequency of trading, because some people are scalping. I will briefly explain what is scalping. Some are day trading, but they don't know what actually they're doing. So if we first talk about the active trading versus passive trading, active traders try to beat the market by developing a trading strategy and executing that strategy through buying and selling activities. So these guys are the ones actively trading a lot, but you don't have to do this if you are not ready psychologically. This is really important. Nothing happens in one day. It is really important to give some time to yourself so you can improve yourself. That's why if you're new in the market, instead of losing everything, I strongly suggest you to passively trade. I will explain in a minute what it is, so you can actually preserve your funds, which is actually super important. Most of the professional traders, I know many investment banking traders, like trading house traders, their main purpose is to protect their funds. So what actually passive trading means? Passive traders try to match the market by regular investments in an index or group of indices using dollar cost average and keeping fees low. So what it means actually, let's a bit clarify this sentence. This means that if you are an passive trader, you can have a budget. Let's assume that this budget is $10,000, and for some period of time, you can let's say that you're investing on Ethereum, and you can buy Ethereum in different period of time with this $1,000 by dividing $1,000 to 10. So we name this as dollar cost averaging, and you can start trading by actually doing passive trade. Then you can move to active trade, and then you can use amazing features of Binance Exchange. So active traders generally use either a systematic or discretionary approach. So now let's talk about what are these. So discretionary traders, we can give Warren Buffett as we can use him as an example. They tend to spend significant time learning about a handful of individual companies and invest in their best ideas. So these guys are, even though they're active traders, they like to invest in couple stuff. They don't like to broaden their portfolio. So we all know that we know Warren Buffett as an Omaha wise dude. So he started his legacy by investing in couple stocks. Berkshire Hathaway is one of this. So this is a way. So you can basically replicate this in crypto space. So you can choose 3, 4, 5 coins, and then you can invest this in these coins. There's also systematic traders like Willie McCord. We can give him as an example. So these people spend time on researching and developing trading systems, and then they carry out their strategy. Their strategy can be executed by a trader or by a computer. There is no limitation on that. And maybe an example of systematic trading strategy would be to buy on a golden cross. So for the ones who don't know what is golden cross, when 50-period simple moving average crosses above 200-period moving average, we name it as a golden cross. And to sell that cross when the 50-period simple moving average crosses below the 200-period simple moving average. So what I'm trying to explain is that simply these guys have some ideas, some rules, but they just apply these rules to whole market rather than choosing some stocks. And there is also algorithmic traders such as Cliff Asness. These people are using algorithms to trade. So let's continue what we already did. Let me cover that. So we already covered the trading activity, how actively you're trading. and discretion. We all talk about that. So now I'm going to talk about the traded portfolio and traded assets, and then we will move to relatively more important topics like trade data and trade frequency. So, let's continue with the kind of market that you're trading in, because it is also important for people to classify traders. Some traders, you know, that they're extremely conservative. They don't like to trade in cryptocurrency market. So this is also a way. Also continue with this. Let's talk about briefly trading style. For the sake of time, I'm keeping this part short. So the data that you're actually using is extremely important, and that's why I put a different data section to this presentation. And also the data that you're using is kind of setting your trading style. So fundamental traders focuses on specific events and to determine which asset to buy and when to buy it. So a common example in crypto space could be mainnet's news or coin burns. For example, Binance is burning BNB, and this is creating some serious price actions. And if you're a trader and if you like to benefit from this price action, you can actually track this news, and there are a bunch of websites that you can actually track this kind of news. Trading on fundamentals is more closely associated with the swing and position trade durations rather than scalping or day trading. So scalping traders are like I do, trading super frequently, meaning that sometimes I can open and close positions in 1 to 2, 3, 4, 5 minutes. And day traders are actually traders who are carrying positions a little bit longer than the scalping traders. So we talk about the fundamental traders. Let's briefly talk about technical traders and what they do. Technical traders use price and volume patterns to understand underlying supply and demand economics. This is really important to understand that. So these patterns are often used to time buy and sell entries and exits. An example pattern would be selling an asset if it breaks through a technical support level. Technical traders use all kind of trading frequencies. So what it means actually, there are a bunch of YouTubers around there. There are a bunch of people who are making some sharings in Twitter and social media. These people are mainly putting some trend lines, some resistance and some supports, and they're trading accordingly. So all of these people are going to the technical trader pod. So if you are one of this, it's really important to know that you're actually trading according to your technical analysis, and maybe it will be nice for you to improve yourself on the fundamental side, or maybe you have to go and improve yourself on the global macro side. What is global macro traders are doing? They use economic data sets to predict where the market is headed. So many people are criticizing crypto markets because they're saying that, all right, so we have the Bitcoin. Why we have it? Because we are critical to the traditional financial system. And why Bitcoin is affected that much from traditional financial system? So the answer is the liquidity. If the market gets and the volume, if the market gets bigger, then the volatility will go down. But until that time, we will be affected from the global global economic and political changes. So that's why it's really important to follow this. So why I'm telling you all of this, maybe I should go a bit slower so people can follow me. Why I'm telling you all of this is that you have to know everything if you like to be a professional trader. But it's always good to start from somewhere. So that's why maybe you can start from fundamental trading, and then you can improve yourself on the technical side, and then you can continue with the global macro level data and quantitative data. As we experience in July, there was some volatility due to the US economic data. So what you have to mainly follow on that side is the inflation, maybe can be an example, or non-farm paying rolls, that can be example. This has a really big effect on the markets, especially on MTR markets, and also cryptocurrencies. So last but not least, we have the quantitative finance traders, or quants. So I'm a quant. So we use mathematical models to predict asset prices. So namely, I'm using R and MATLAB. So I'm making some models, and then these models are predicting the asset prices. And then I'm going back to the global macro data, technical data, and fundamental data to understand what I should do. All right, let's continue. Almost finished with this half boring chart. Sorry for that. So last one is the one that everyone actually knows. So this is really important for people to understand, because I think an unexperienced person cannot be a scalp trader. So scalp traders trade with minutes, and the capital limitation is very high because these people trade really frequently, and they got risk, and they really need a huge amount of money, as they are tracking and trying to chase the small amount of earnings. So these traders trade intraday full time and take tiny profits repeatedly. So like 0.5%, 0.2%, that will be not enough for a scalp trader. Because these people gonna do too many trades per day, that if they repeat, they will make a really good amount of gain. So day traders, they also trade full time and buy and sell on the same day. But the difference between the traders and scalpers is that day traders usually hold their positions from minutes to hours, trying to catch a larger move. So they generally do not hold positions overnight and close out all trades before the market closes. So most day traders use leverage. There is also swing traders. Swing traders try to capture larger multi-day moves. So they find they look at the larger picture. They check the larger, let's say, time frames, and they try to get the momentum. And once they catch it, they benefit it. So it is not meaning that one is better than the other. Actually, one is better fit to the beginners compared to other. And it also doesn't meaning that one has a lower potential earning than the other. I know many people making quite good amount of money by using swing trades. I still have friends, they are carrying positions from 20K Bitcoin price, 15K Bitcoin price. So it doesn't necessarily mean that it's a bad to be a swing trader. Let's end this session with talk about briefly position traders. Position traders try to capture the longer duration moves in an individual investment. So these people can open position and like maybe 10 position per year. They afford the most flexibility, day-to-day fluctuations, because the day-to-day fluctuations are not part of their life. So they don't care about what is the Bitcoin price today or tomorrow. They care about the monthly openings, monthly closing, and etc. So this part is done. So now let's go the strategies. I'm not going to talk about strategies deeply on this part as we have a limited time. I just want to make things clear in people's mind so they can actually position themselves. Because I believe knowing yourself and understanding where you are is a good first step to improve yourself. So we already talked about the trading styles. So maybe you have an idea about where you are located and where the professional trader is located. Now we're going to talk about some methodologies, because also many people are interested with this. I think this presentation, this live broadcast and presentation will be good, so people can understand actually what they're doing and what are different trading styles and disciplines. So many people are talking about price action trading. Price action is a great discipline to take some action in the market. So what actually price action traders do? While technical traders, we talk about specialize in plotting the price movements of a specific asset over a certain period. Price action traders just focus on the price. So they believe that everything that they have to check and analyze actually reflected to price. So they don't actually use any kind of indicators. So their way of trading is completely different than technical traders. So in a nutshell, price action traders ignore the fundamental analysis metrics. Instead, they read the market and make subjective trading decisions based on the recent and actual price movements. I'm actually using quite frequently price action, but what I believe is that in order to be successful, you have to know everything. So you have to, because if many people are using technical analysis to open position, then you have to know technical analysis so you can emphasize what they're thinking and how they're, what is their way of thinking, where they're going to open, where they're going to close. But also it's important to know what is it actually. So I don't want to take too much time of you. I'm going to also skip that part so we can talk about the data. Pardon me. Many people don't know hedge mode. Already Justin explained this, but having hedge mode on your arsenal is really good for your trading performance. So for the experienced traders, I strongly suggest to activate the hedge mode because hedge mode saved my lives too many times. At the last part, I'm going to talk about my experiences, and hedging mode is definitely something that I use a lot. So to increase the interaction, let me also open the webcam. So, all right, hedge mode, Justin told you that it gives you an opportunity to open positions both sided. And there's also vanilla trading. What is vanilla trading? When I was talking with Turkish community, I realized that not actually anyone knows what is vanilla trading, and Binance has vanilla trading option, which is great. If you are trading, if you're a margin trader or if you're a future trader, it is really important that you know all of the features. And vanilla trading is one of the best features that you can use in derivative market because it gives you an opportunity to have put and call option contracts. And I'm not going to dive into this topic, but as far as I see, Binance Academy has great content on this in YouTube. So you can go and check. I use some of their content to show the Turkish society what they have actually on vanilla trading. But briefly, I can tell you that the future contracts are grouped under two main headings. One is American style, one is European style. So vanilla trading is on that position itself on European side. So you can have call and put options by paying the actual fee of the contract, not putting all of your money. So in that sense, it's really different than classical future options, so you can save actually more money and get less risk. There is also cooling period. This is really important for people who are kind of addicted. Sorry for that, but I know some people, they are addicted. They're saying, hey, Efe, do you have any position? Would you like to share with me? And I don't share because, we're professional, we're controlling millions of dollars and we know how to stop ourselves, but these people, they don't know. And it's like kind of a trading addiction. And that for that kind of people, cooling period is really great. Justin already talked about that. So let's move to the other part. There is also a question coming from people about hedging strategy. So let me take my tired face from screen again. All right. So what is hedging strategy is really important. It's really important to understand hedging strategies in order to make some money because, you have to hedge your risk. The market is super volatile, that we said, and you have to manage that risk by controlling your psychology, but it's not enough alone. You also sometimes you have to hedge your risk by using some of the different instruments and tools. So what you can actually use is that you can use short selling to hedge your risk. What is short selling is that it means taking a position to sell an asset when the trader or you believes that an investment will fall in value. So imagine that you're carrying a Bitcoin position and you believe that Bitcoin has a significant downside potential, then you can actually short sell Bitcoin. This is one of the basic way to do it. You as a trader can look forward to making a profit by buying back at lower price. So let's say that you sell it, you're short in Bitcoin, but you also have a spot Bitcoins, and then price actually fell down as you predicted, and you were right. So now it's time to enjoy your profit. So you go back and you get the the Bitcoin from lower price, you close the contract and you benefit the profit. There's also futures. So futures are, we can check futures in a couple different ways. So let's first talk about future contracts. In finance, the term futures refer to an agreement. It's really important to understand that it's an agreement to buy and sell an asset on a specific future date at a certain price. Sometimes it can be perpetual, so there is no end contract date, but mainly it is like that. And many people also don't understand that future buys and sells doesn't affect spot prices. These are two different things. If you're making margin operations, that affects, but futures contracts is totally different. That's why there are funding rates, etc. But I don't want to deep dive in this topic as we have a limited time. So this is what I explained. All right, let's also go to perpetual contracts. Actually, this is working as futures. Perpetual swaps are derivatives that allows you to buy or sell the value of an underlying assets without setting an expiration date for the position you take. This is the main difference. We can count this as a main difference. So there is no end date for the contract. It offers you more buying power than you would have when you spot trading, because you mainly use leverages. So as Daniel explained, and also Justin pointed out that part, if you're using 5x leverage, basically you're making 5 times, opening a position with 5 times bigger than your initial capital collateral. All right, let's go to options. Options are another type of derivative in crypto. They allow investors, or they give rights, but not the obligation to buy or sell an underlying asset at a specific price or before a certain date. So you can use options as a way to hedge your cryptocurrency by limiting downward losses in declining markets. Put option, this is basically what I'm talking about, is vanilla options that you can use in Binance crypto exchange. So put option increase in value when the underlying asset declines below the exercise price of the option, while call option will decreases. So this results in a significant level of leverage hedge protection at a relatively lower cost. So as a professional trader, I am using intensely these options as I'm hedging my risk. So let's continue with data. Actually, data is the king. What it means, most of the traders, they have really high data costs, because we know that in order to compete with a big investment house, we need data. We have to understand the market. This is really important to understand the market. So I don't believe personally there will be long-lasting success without analyzing the data. So I don't necessarily position myself as a data geek, but I strongly believe that data is important. So actually, we have around 10 to 12 minutes. So let's dive into data section. I hope it is being beneficial for you and you understand where actually you are in this trader scheme, so you can understand where you are and you can improve yourself. And now let's dive into data. What kind of data professional traders are using? So let's start with liquidation data. Let me take myself again outside. Oops, sorry for that. Let me share it again. Here we go. Hope you can see it. Right. Yep, stop webcam. So first, let's talk about liquidations. I'm checking liquidations nonstop as it is affecting all of my positions as I'm positioning my portfolio mainly heavily in also derivative markets. And also margin liquidations are affecting the spot market. So liquidation levels are what I do there. I identify potential liquidation points of leverage longs and shorts. This is really hard to believe for amateur traders, but we can actually calculate the potential liquidation points, so we can have a clear idea about if there is a short squeeze or long squeeze in the future. That helps substantially to have the position. I'm also checking, I'm a big fan of net positions heat maps. So heat maps that display live and historical profile of open interest through price buckets where contracts are opening and closing. It's really important to understand what people did in history in order to understand what they're going to do in the future. This is what I believe. So I'm also checking cumulative long and short delta, what it means actually for people who don't know. I locate exactly how longs and shorts are changing over time through cumulative long short ratio, and also I'm checking the cumulative long short delta ratio. Large increases in CLSD, so delta can be used to isolate which side provides liquidity. I know these are quite complicated stuff to understand for the new beginners, but there, as I say, there are a bunch of stuff in Binance Academy. I'm not just promoting Binance Academy because I am actually their guest. I'm doing this with pleasure, and it is non-profit thing for me, but they actually have really good data on their YouTube channel. So on the top of liquidations, I'm also checking sentiments. It's really important to understand the sentiments. What I mean by sentiments is that long short data, this is one of the first thing that I check. What it means is that it shows percentage for both retail and larger traders, as we name whales, across multiple exchanges, including Binance. So I track the percentage of accounts that are net long or net short on Binance by different granularities. I'm sorry for that. So all accounts globally, I'm checking top traders and top trader position as they're the largest traders. So this gives you a clear idea about what actually the others are doing, so you can position yourself not against the whole world, right? This is not a good idea to position yourself against the market. So let me give you 1 second break and drink some water to not have the same pronunciation problem again. All right. I also check the average leverage used by top traders. This is also important to understand what people are doing. So what I do here is that I identify how the top 100 traders are using their deposit funds. Average margin used is calculated from average percentage of initial margin used by top traders. I don't want to go to detail. I know I'm losing you each time when I go to detail, so I'm going to skip that part. Just know that I'm using this data. I'm also using net long and net short data. So instead of just looking at those who buying and selling, I take my analysis to next step by breaking buys and sells into longs and shorts. I'm also checking the interest as they give a great idea about the market's position. So I'm checking funding rates and fear and greed index. Last but not least, we can talk about the order book and trade data. I'm really big fan of this kind of data too. I know people are getting crazy. They're getting really angry to me. They're saying, how are we gonna check all of this data? Are you crazy? No, actually I'm not. So you have to start from one point, and I think this will be a really good roadmap for you, this presentation and this live broadcast, so you can understand what is actually professional traders doing. What I mean by global order book aggregations is that order books bids and asks and bid-ask ratios across all the major exchanges and major coins. So I check all of this before I open position to understand where is the liquidity, where the actual smart money is investing. For example, if order book ratio is 1%, is 20%, this means is that there are 20% more bids than asks within this 1% of the current price. This most of the time, as I'm doing scalping and day trading, I'm trying to catch really close bid spreads. I'm also checking order book ratio heat maps. We are almost finishing. So what I do is that I analyze supply and demand based on limit orders across multiple order book. That level we are using heat maps. So I'm basically going and checking the order books and trying to understand what kind of orders there are on the order book and how I can actually speculate this orders in order to make some money by also checking this kind of data. And last data that I checked for today is that cumulative volume delta. It tracked buyer and seller activity by separating total volume into buy and sell volume, identify which side is more aggressive by monitoring volume delta. So volume delta is calculated by market buy volume minus market sell volume. All right, so we reached the end. So now, as the last part, I will talk about some of the experience, maybe one or two experience or memory that I have time for it. Let me open my camera again. Yes. So since 35 minutes, you're listening me nonstop. I hope I contributed some stuff to you. And for the technical issues and technical details that you couldn't understand, you can go to Binance Academy. Let me talk about my experience first. One of the experience that I have from crypto market. When I first entered the crypto, I was thinking that it was like 4 years ago. I was thinking, all right, there's a great volatility, and I position myself an experienced trader. I said, all right, I can make a really good money. And as all of the professional traders like Jesse Livermore and others, I bankrupted in I don't know, couple months, because I was, so young and so sure about myself. So what I did, instead of giving up, I noted I lost really good amount of money. It was almost like half of my trading portfolio, because I was like, all right, there's really good money here. And then I lost all of it, but I didn't give up. So I come back more strongly. I check the mistakes and I fix these mistakes. And there is also one memory that I can share from the influencer arena. So I know many influencers, they are actually also trading really aggressively, but it's not, and it's also about the self-confidence, right? Because people believe themselves, they're so good, but market never, ever leaves you without punishment if you're so sure about yourself. Because you can be sure there's no problem with this, but you have to also find some mathematical, solid scientific data to prove actually your position and your stance. And some of my friends, they lost everything. There are a bunch of people who are thinking that, okay, I lost everything. I cannot live like that anymore. And that's why I think it is really valuable that Binance is changing their stance with leverage. Now they limit the leverage positions, and they are giving this kind of educational content to you. So all that on my part. If there is anything that we like to continue, Leah, we can continue, but right now I'm done.
FA, thank you so much. That was very, very interesting. I think your last comments there definitely resonate. Never get too overconfident with it. The market will punish you. Take it easy.
Definitely.
Thank you so much.
Cheers.
I'd also like to say thank you to Justin for joining us, and thanks to everyone who sent in your questions. I really can't believe that we are already at the end of today's session. We hope that you enjoyed today's responsible trading workshop and took away some useful tips and strategies that you can actually apply to your own trades. So next Tuesday on August the 24th, you can actually join us at the same time for our next summer camp webinar. I'll be returning as your host, and we'll be showing you how to manage and grow your crypto, including how to build your portfolio, identify promising trades, and how to choose the right cryptocurrencies for you. So I'm excited to hear from some of our speakers. There'll be a lot to learn. So as part of Binance's commitment to the long-term growth and development of a sustainable cryptocurrency industry, we'll be bringing you more online events and educational content on responsible trading to ensure a fair and equal playing field for all crypto users. So guys, if you haven't already, don't forget, register on Eventbrite by clicking the link in the description. After today's webinar, you will get a short quiz in your inbox, and the first 10 to 20 people who complete each quiz will qualify for some special prizes, including BNB tokens, Futures Trading Vouchers, and some really nice Binance swag. Winners will be announced on the Binance Twitter account within 24 hours, so be sure to give Binance a follow on Twitter as well. Thank you to our sponsors, Certic and Clover Finance, for supporting Responsible Trading Summer Camp. Until next time, we will see you next week.